Hey, what's going on, everybody? How are we doing today? It's Wednesday, guys. It is Wednesday, December 19th, 2018, and I hope you're all feeling fantastic out there in crypto land. It's doing well. I am coming live to you from the frigid wastelands of the Midwest, as you can see in the background here. It's quite cold and frigid outside, guys. In fact, kind of cold myself. Anyways, let's start off today as we always do. Again, I just hope you guys are trading safely out there and that you guys are making smart, intelligent decisions, guys. Risk management, making sure that you're not making irrational decisions will take you very far in this space. Discipline and caution are the tenets of a good trader. People who tend to be a little bit more aggressive can be successful if they have a disciplined aggressive strategy. But unfortunately, the majority of individuals that I tend to meet, especially in a newer space such as cryptocurrency, they tend to jump into positions of very quickly with very little regard for their personal well-being or safety. And while that's often fine and dandy when you're in a strongly trending market, when you're trying to do that going counter trend, which does need to be more disciplined and more strategic, often they will get themselves in a lot of trouble. So obviously, really fantastic day. We're having a green day across the board, as we've been having for the last few days. Altcoins performing quite nicely, stalling out a little bit, except for a few key areas as well. Bitcoin, of course, performing well, and we'll get into all of that as well, guys. Just did want to go over some basic stuff. I don't really have any news to go over with today. I guess just the regular stuff. Me and Scott will still be speaking at the American Association of Individual Investors on January 19th. Tickets are still available to that. We don't get anything from the ticket sales. That all goes to the AAII. But we will be speaking in Brookfield, Wisconsin at the Westmore Country Club. Again, that's January 19th. We'll be speaking about blockchain technology, how to use mining as passive and income source, and how to invest in cryptocurrency. It's not really meant for individuals who are already in the space, although if we will be probably broadcasting that and recording it. Haven't really worked all the details out about that, but just excited to do it. We haven't spoken at a conference since May, and that was in Chicago, Illinois, at the Law College there. So that was a good time. It was really interesting. We still have yet to get all that B-roll footage up from that trip. We had a really good time in Chicago while we were there, so hopefully get that up here at some point in time. Check in with the Cracking Cryptocurrency Premium Trading Group, guys. We are really looking to close out a fantastic week 3 as well. I do want to give out a shout out to our analyst, Alex. He called a monster Bcash long yesterday. We were able to crush that. When we hit our final take profit with the right entry was over 50% P&L on that trade. So really happy about that. Obviously, we traded Loopring yesterday. We've been trading Verge for about a week. We entered into that trade on the 7th. We did end up closing that out this morning when it did finally hit our last take profit target at 786. We were trading Verge to USDT on Bittrex, so that closed out with over 30% P&L as well. I had a couple losers yesterday. TRX Z18, ETH Z18, we did try to take to the short side. Those didn't play out. That's fine. Small losses. Let's see here. AMB finally did hit our final targets yesterday, and we got out of XLM. We didn't hit XLM on the bottom. We were able to get out of XLM at break even, so that was cool. Happy about that. Patience and strategy, guys. All right, so everything going well for the Cracking Cryptocurrency Trading Group. Let's get into the charts, guys. All right, so we've been talking about this for a while, guys. We were talking about this 200 period simple moving average, looking at the weekly chart here on Bitstamp. We did find support nestled right on that 200 period simple moving average on the weekly chart, and we did bounce from it quite nicely. We have a couple areas of resistance coming up upon us, guys. And just let me give my overall caution here. And I'll get into this really when I get into the XBT chart. But I've been speaking at length for several days. It was 2 days ago that when we were first experiencing the initial pump, I said, guys, I'm really not excited about any of this until I see a close above 3,600. We did see that close above 3,600, and that was the kind of the excitement time to be looking for a potential trade up to that 4K region. That has actualized. Now, looking at spot price, we do have price currently sitting at 37.97 at the time that I am making this stream. Now, let's talk about the negatives, guys. We do have the measured move of the falling wedge daily pattern. So I talked about that. If we go to the daily chart, we do have that falling wedge formation right here. The measured move of that does actually put us up at 44.02. Now, I'm not overly excited about this. The reason why is because wedge patterns to me rarely play out the way they're supposed to play out. They are the most pernicious of chart patterns, as you'll come to find out if you spend any time of trading. Head and shoulders I like. Inverted head and shoulders I like. You know, ascending triangles and descending triangles I like. They tend to play out the way they're supposed to play out when they do break positively, and you do get confirmation of the break. But wedges are kind of bullshit in my opinion. Sorry for my French. This is a family-friendly show. I'll try to cut back on that. We do have some pretty important areas of resistance coming up upon us on the weekly chart. We do have this ascending logarithmic trend line that has never been broken in Bitcoin's history except for a couple weeks ago. We did actually close and open a candle below that. We've done that twice now. We've opened we've actually only opened 2 candles below that, but we have closed 1 candle, 2 candles below that, and opened 2 candles now as well. Looking for this 3rd candle most likely to also close below it. Now, what is the potential here? Do we run up to the ascending logarithmic trend line, find resistance off that, and then initially push back down? Because I'm not actually looking for a long position now, guys. I'm not. I'm just not. You know, the option of taking that potential long at 3,600 was on the table. I feel that's played out. You know, everybody is kind of calling for the moon and kind of calling for the tops. Here, I'm not going to be that guy. I don't have any indications that the downward trend hasn't stopped. I've been saying for over a week now that this is a likely area for us to get a nice recovery rally around that $3,000 psychological support area. But my long-term play is still to continue to take this to the downside and look for that to eventually break. Again, looking at the weekly chart, I have plotted out the time dilation fractional here. So we do have the top at the week of the 11th, December 2017, and that period of bars to right here when we had the breakdown, again, was about 466. Let me do the measurement here. So yes, 47 bars on the weekly chart, and so I've plotted that into the future here as well, right here, 47 bars into the future. And that is actually putting us on the week of the 7th of October, 2019. I talked about this yesterday, and again, I haven't done the work on this to fully flesh this out as I would like to, but I do think this is an interesting pattern. What happens to the week of October when we do actually get to that Q3 2019? Are we going to be reversing from our 2331 area where I do think we eventually find our bottom, or are we going to be just getting to that? That depends on how long things will play out. Looking at the weekly pattern here, we do see that it took this long period of time to get from the top to the breakdown point right here around 6K. And I do expect that it will take at least the same amount of time to get from there to the bottom. So I don't think the bottom is in, guys. However, you will see that based on this time period, you will also see that, do I think that we just make a sudden and sharp plummet down to this area? No. I think that we are going to be moving in an area of Bitcoin's history where we are going to be moving at a little bit of a slow slog. Now, where in an area where shorts do get squeezed like we're seeing right now and price does move up fairly rapidly, you do get kind of excited to think that we are going to have these extremely high volatility movements forever. I just don't really see it in the cards, guys. I really don't see it in the cards. I think that time has probably slowed down significantly. Just on the weekly chart, when we get into the daily, there'll be some more significant areas. But just looking at the weekly, we do have key areas above us. We do have that 8-period moving average, or 8-period exponential moving average creeping down upon us as well. Everything kind of now turning down below that 6K. Below that 6K region, which will make it extremely difficult to get over that. If we look at volume profile, we can actually see that the point of control, the highest point of control, is coming in right around 64,898, around that $6,500 region. Again, it's a wide range because we are looking at the weekly chart, so anywhere from 6,400 to 6,500. Again, until we get above that area, I'm still in bear country, guys. The bears can attack at any moment, and I am expecting that they most likely will look at opportunities like this relief rally to short. Every time we've seen a nice little pump up, we have seen us get absolutely smashed back down on our face. So for this reason, I am not going to be acting like a traditional retail trader and FOMOing into a long position. If we look at volume by time down here at the bottom of my screen, we actually do see that we do have falling volume, okay? Now that we are only about halfway into this weekly candle, so could it play out more significantly? Yes, it could. However, we are still currently underneath the moving average for the weekly chart, and we do have this descending volume as well, guys. So until we really see impressive, strong weekly volume, I don't see any indications that the bear trend is over, and for that reason, am I going to be looking for opportunities to go long, especially at this point in time? Absolutely not. Even if this thing does run up significantly and I do get pushed out of positions, that's fine. I will hedge my risk and I will still be looking for better opportunities to go short until volume and key areas of price here tell me that I'm wrong. We do see that there are some areas now that I would be interested in. Again, I was interested in taking the long from 36 to 4K. I feel that's played out now. Now, what are areas that I start to feel more, what do I need to see in addition to volume to be more convinced that maybe we make a trudge back up here through this actually this LVN back up here to test something like a 6K region? Well, the first thing would be a close above the previous weekly candle right here around 40.95. So if we are actually able to close the weekly candle above 4K, that would be interesting. Again, I think that we do have this ascending trend line. So if we actually do extend this puppy out, let's take a look here. Let's extend this puppy out. Okay, excellent. All right, so current weekly, if we did actually run up to touch this current weekly right now, that would posit us around 4176, 4200. If this happened next week, this would actually bring us up to around 4300. If it took 3 weeks, we're getting closer and closer to that measured move of the falling wedge daily pattern. But really the only reason that I've drawn this line on the chart is for the chart patternists among us to have something to talk about. I'm not really putting any credence on this level around 4400, honestly. Although it is the top of this indecision spinning top doji candle, it is really the top of that as well, with a variance of about $30 there, honestly, give or take. All right, so let's get down into the daily chart so we can talk about some more interesting things, I do believe. Looking here at the Bitstamp price, we are sludging our way through a pocket, through an area of price that is just fraught with peril, as I talked about yesterday. We did have that nice close above 3,600, as I talked about yesterday, the close over this bearish resistance order block. We do actually have a daily open above, an opening that is trading now above the 21 exponential moving average. We do have that 55 daily coming in down around us. Again, that is also interesting too, because it is also pointing around that $4,400 area as well. But I'm not really looking for potential movements up to that area until I see, what would I need to see? I would need to see, this daily candle close above, I'm not even going to put a price to it. There's really very little that could convince me to go long in this particular area right now. The trade on the table was the breakout long from 3,600 to potentially 4K. And you would have been able to capture, we didn't run up all the way to quite 4K. I think the top of this candle is 39.82. 39.24, excuse me. 39.24 is the high of this candle right here. So, you know, kind of everybody's saying that yes, we definitely must hit 4K, but psychologically it seems that we might also, it seems that we most likely will not as well. I know that's a little hit and miss, guys, but let me give you my reasoning behind this. My reasoning behind this is, if we go over and look at the longs and shorts to ratio, actually, look at what the longs are doing. The longs are completely dropping off a map. We do see that the longs do begin to pick up significantly before the actual pump, beginning on the 10th of December. So if you go back to the 10th of December, we can see that right around this area, pretty much actually when I was starting to go long, around 3,300, we do actually see the long starting to pick up around this area, which is where I was going long as well, guys. 3,500 was the initial fill, doubled up at 3,300. I did get a partial fill initially. Again, we traded XBT 4 times in these past 2 weeks. We did get our initial fill at 3,500, 3,300, and 3,200. We actually did get a partial fill at 3,200. We took profits at 3,550 and 3,620 on that particular movement. 3,620 being the measured move of that inverted head and shoulders that we did see play out on the 60-minute chart, the 30-minute chart, the 15-minute chart, etc., etc. We did take, again, initial fills at 3,200 and 3,164. The reason we took fills at 3,164 was that was the measured move of this head and shoulders that Doc from the members group had pointed out. We took profits on that particular movement at 3,280, so that all played out quite quickly. Then we did refill at 3,200 and 3,150, and then we did take profits at 3,500. So we were out of the long trade, as I said yesterday, at 3,500. Although it's interesting to see that the long-term targets for my long position did complete, guys, but I did not like how the market looked here around 3,500. So I did get out of the trade. I'm glad I did that. I hedged my risk. I took my nice profits from this trade. Again, that was 4 times that we were able to successfully trade XBT. And now I just see what retail has been able to push this up. Keep in mind, guys, this is retail money. This is not necessarily smart money. And I don't really like the way this looks right here as well. But, you know, just looking back, it is nice to see that my original long-term targets were validated of 37.32 and 38.65. All those were hit quite beautifully. And now we do have the Cheers mug that has been up here for a while at 40.24. What is the potential that this does get hit? I think this maybe gets hit on a wick. Potentially this does get potentially hit on a wick, although I don't think, just the way that I'm looking at it right now, I think that I'm going to bet on the party being over, and at this point in time, look for trend exhaustion at this point in time and look for a healthy pullback. Again, we did not get a significant pullback to test this area as support after we broke up from it. We only pulled back to test actually the point of control in this consolidation range, and then we pulled up and broke up here to above 3,800, and we have not had a significant pullback to test this as support either. Whenever you see the point of control not get returned to be tested as support, it generally does not work out well for the bulls. You know, this is an area where, yes, could we see another up thrust here? From here, yes, we most likely could. It is a potential, but I will be looking to fade that as well. Again, just like I'm looking to fade this right now. So, in an active short position at the time and expecting this to actualize to the downside, at least to retest this area of 3,500, 3,600, because again, whenever you do not come back to pull back and test the point of control as support and actually establish strong groundwork, it generally does not play out well for the bulls, especially in a market such as this where we do have a lot of consolidation and we do have an overwhelmingly strong bear trend. Again, I do like the fact that I was right in the idea of a recovery rally around these key psychological areas of 3K. However, it is starting to look to me like the party is over, and looking at what the longs are doing and looking at the shorts start to tentatively dip their toes back into the water. Again, the shorts did start picking up around the 18th of December. So yesterday, you know, so all throughout this area, while retail is continuing to pile in and look for long positions and continue to push price up, we are actually seeing the longs and shorts over on Bitfinex take their profits from their long positions, and now we're going to have to wait and see whether they decide to pile back into their longs or whether they're going to continue to move the market down, as I expect that they most likely will. That is what I am hedged on and betting on myself. Let's go take a look over at some data metrics, guys, and see if we can get some confirmation for our positions here. Looking over at coinfarmonline.com, or excuse me, coinfarm.online, we do still see in the last 24 hours the superiority to the long side. Aggressive longs entering at about 52%, shorts entering at about 47-48%. If we take a look at the last 30 minutes and look for significant movements, we do have about 5 million longs coming in. If we look at the last hour, let's take a gander at the last hour. We do have about the same, obviously the superiority going to the longs of about 12 million more contracts, 12.5 million more contracts to the long side than to the short side. We have about 41 million aggressive market orders to the short side. We have about 54 million aggressive markets to the long side. So the way that we use this data metric, guys, is this is a calculation of the market orders that are being entered into the books on BitMEX. And what we look for in this particular situation is an area where because market orders are going to be the pulse of the aggression of the market, we're looking for a local top to be formed when the longs get over their skis and when shorts get over their skis as well. So when we do reach an unsustainable level like 60-40, we are looking for downside potential. And actually, if you go back in time, let's go back in time here and see that actually we've been vacillating around this 52-47% range here for quite a little bit. So that's why I say that we could see another upthrust here. There does seem to be the amount of capital to do that. But again, looking at the longs and shorts on Bitfinex, we do still continue to see the shorts rise up, and we do still continue to see the longs completely die off here as well. Good, I do like that. Now, Can I be wrong in all this? Yes, trading can go either way, guys. Whenever, again, whenever I click that button and enter into a position, again, all I can do is stack the odds in my favor as much as I can, and the market is going to actually decide if I am profitable. The only thing that allows me to stay in the game is the fact that I do use risk management. I do pull out the calculator every time before I make a trade, and I do calculate based on how much money I have, how much am I willing to risk in a position, and I do use something like average true range to determine how risky is this position based on how risky is it not. However, guys, I have seen and just noticed, guys, we are in an overwhelmingly bearish trend. Looking at the daily chart, this doesn't, you don't need anybody to tell you this, guys. And so am I going to get overly excited about a relief rally and look to take that for a long at the top? No, I'm not. This is an area in the market when most people are looking at this, and again, I've gone over this before, the psychological aspect of retail traders. Again, they look at this and they are just concerned and consumed with the fact that price has moved up. They feel like they've missed this potential movement, or perhaps they've gotten in and gotten out several times. Again, Bitcoin moving up almost 23% within the span of 3 days. Okay, so that's that nice bullish Bitcoin movement that we like to see. However, it's just the wrong time for it, guys. It's the wrong time to get overly excited about it. And even if it does move to the upside, that's fine, guys. If you guys just remember and realize that there's always going to be a trade on the table, there's always going to be a trade to take. You'll always be able to take XBTs to the long side. When I feel it's in a safer position to take it to the long side, I'll be taking it to the long side. But looking at the area that we're coming into right now, you have that 4K, kind of hanging overneath your, you have that 4K region hanging over your head. You do have this HVN right here around coming in around 39.42 to 39.71. Over that, you do have that 4,000 sitting in that LVN. So I could see a wick up to that LVN, which is often what I'll see, kind of a stop loss hunt. Although I'm fairly kind of feeling the idea that that's already happened. Let's go over to the BitMEX chart and take a gander. We'll start off here with the 4-hour chart. So this is generally a good example of what you will see when you do see retail pile into a position and savvy traders taking that position to the downside. As you can see, you clearly had a lot of limit order space throughout this area, expecting that more normal retail is looking at that psychological number of around 4,000 and just convinced that price is going to move up to that level. However, for that reason, savvy traders would have their short limits placed in this area. And again, you do get this hammer candle to the top, which is generally, not a hammer candle, an evening star doji formation right here. This is shaping up to be a shooting star pattern. Again, I would expect at least a pullback to 3,600, 3,500, if not potentially even 3,385 around this $3,400 area to retest these areas of resistance, or as previous resistance as support if we are going to get a healthy movement upwards, guys. So would I be potentially looking for a long in those areas if I see the volume confirm that maybe this movement could continue to the upside? Yes. But at this point in time, am I looking for a long position? No. And it's the same reasoning that where we were sitting right here, guys. I don't like the way this looks. I would have not, there's nothing that anybody could have done, even if Marty McFly had come back from the future and said, listen, Justin, price is going to move from 3,400 to 3,500 right now. You need to take that trade. No, because it's not a good statistical odd for me to take. More than likely, it does get faded. It does get pushed back. And again, the first breakthrough on 3,600 did not take. We did get faded. That is a situation where we actually did pull back to retest the HVM, this point of control high volume node right here, as support before continuing upwards. And then we did break 3,600. We did get a higher time frame candle close above 3,600. Again, that was your call sign to potentially take a long right here. That would be playing out for you well, as I spoke about yesterday, as I've been speaking about for several days. And now it's looking to me like that has played out. Now, is this an area where you do want to be cautious in the market? Is this an area where I'm excited to short from? Actually, yes, it is. But it's also an area where you just can't throw caution to the wind, and you have to keep your risk management strategy sound, because retail is irrational. They can push this up for another leg up. Yes, absolutely they can. And if that happens, guess what? I get stopped out of my position, and I look to short that position too. It's gonna take quite a bit for me to take a long position on XBT right here, and I'm happy and very glad for anybody that's in a long position right now, and that is playing out for them. That's fine. But as a trader, it's not the smart position for me to take right now. I'm not looking for it. And if that makes me counter trend to what everybody is doing, that's fine. I've been doing this for quite a while, playing against the trend, and I'll be okay. People will be screaming at me and being like, nothing that you say makes sense. Well, it makes sense. All right. Let's hit up the chat, guys. Christian Debick, hey, what's going on from Croatia? How you doing? Ben Joseph and Crypto Friends, what's going on? mbait22, hey man, good to see you. FN Base, a lot of fire, man. Scott Mastash, Cracking Crypto, hey man, thanks for holding it down, moderating for us, my friend. Let's see here. MT Coiner, aloha from this. From these shores of Montana. Hey, the way that you kind of spelled that out, I thought you said the seashores of Montana. I was like, hey man. Hey, Texas Blues, what's going on, man? Glad you made some profits in that XLM, my friend. How about Ripple for end of year 2018? How about $3, man? That'll make everybody happy. Nitin Soki, we were trading Verge, the BTC USDT pairing on Bittrex. Gene, thanks, man. I highly appreciate it. Steven Chizurum, again, what did I say, guys? I'm going to stop doing last names because, again, every time a last name comes out of my mouth, I'm confident that I mispronounce it. Anyway, Steven, how you doing, man? Mbate says, don't worry, boys. I've been a good boy all year. Yeah, right, dude. I know that's a lie. And ask Santa to pump BTC new all-time high incoming. Hey, thank you so much, Mbate. We appreciate it. It's going good. Again, guys, you have to remember that I do have spot holdings of BTC. So I am, regardless of the way that I take positions in BTC, even though I'm excited to be taking shorts from these areas, it's still a hedge. Even if I do up my leverage or up my capital in whatever short position that I'm taking, keep in mind that I have been adding to my spot position on the way down. So it, being hedged one way or the other, like for example, like one easy way to do it is if you're going to go long on a particular asset and you're fairly confident that it is going to actualize to the upside, well, take a low leverage short with less capital or an equal amount of capital, whatever, on a December's contract. For example, if you're going to take BTC to the long side, take ETH CST to the downside. Do you end up breaking even a lot? Yes, but sometimes hedging your bets is the safest thing to do. And that's how professionals do it, guys. ICO News Channel, what's going on, man? VB Streets, much gains, boys. Hell yeah. Together to the bottom says you were talking about 4.4K when I was long. Now you talk about shorting since you closed your long at 3.5K. Could I potentially be biased? No, but the reality of the situation is that every morning I wake up and the chart looks different and I have to shift my analysis depending on what's happening in the real world, man. Santa request was burnt on ETH pumping. Let's see here. Lots of BTC longs taking profit and shorts piling in could be notable for upward movement. Again, I think that we could see another potential upthrust here. Looking at the 4-hour chart, we do have this next bearish order cluster above us. The next bearish order cluster is sitting right here, 39.31, 39.22. No, that can't be right. 39.31, 39.92. Okay, that puts us right up there where I do have my mug for that ultimate long position target that I entered in around here. So, it's just kind of one of those things in trading. Will I be happy that my analysis plays out? Yes. Am I happy that my trade played out? Yes. Am I looking for a short position around these areas? Yes. Again, this is typically an area where it does not work out for the bulls. We're coming back upon this distribution area right here. Again, I'll remain open to potential areas to continue to short from right here, but I don't like the way this looks. Just psychologically, based on the fact that we've had a nice run up, we do see those longs completely dropping off, and we do see now. Here's one way I would factor that in, Texas Blues. If I did see a massive, huge spike in shorts, then you have a dramatically higher number of potential sellers. Potential buyers, because those shorts need to cover. But they're not really in uncomfortable positions yet. I think that they can hold on to their positions for quite a while. And if we do look at And yeah, one way that you could potentially look at this is that you've had a longs take their money off the table. Okay, they've taken their money off the table. After everybody kind of piled in and price was able to move up, longs took their profits off the table. Does this mean you have a lot of potential buyers? Yes, it does. But I'm going to need to wait. I'm going to need to wait and see. I'm going to need to wait and make them prove it to me. So until that time happens, I'm still going to respect the overwhelmingly bearish trend at this point in time. I've been able to capitalize on this relief recovery. And for right now, I'm going to respect the dominant bearish trend and look for opportunities to short here. Again, everybody that I know, and kind of one of the things I do too is just look at what everybody is talking about. So I wake up and after I do my analysis, then I like to look at the news, and then I like to look at what social media sentiment is doing. And social media sentiment is overwhelmingly bullish at the top of an uptrend, at the top of a relief rally, with longs falling off and shorts starting to pick up again. I think that retail is going to get hammered on this one, guys. Again, if you would have been taking, XBT long, and it's not like I'm right and you're wrong, guys. If you want to get talked down to, you guys can go watch Tone Vase's channel. I just pointed out key areas where I thought it would be nice to go long from. It's 3,500, 3,300, 3,100, and those ended up playing out well for me. And now I'm fairly comfortable in the profits that I've taken from that, and now I'm looking to take this to the downside. And whether that's a quick move down to 3,600 or a 85 or an actual break of 3K, that's the movement that I'm playing for, guys. Another thing too is that when you're looking for trend exhaustion, you do see this rising volume on this movement up. And then what do you see here? You see a massive spike in volume. You see a volume spike at the top of an uptrend and a reversal candlestick pattern on the 4-hour chart. We see the same thing on the 6-hour chart. We see the same thing on the 12-hour chart. And we pretty much see the same thing on the daily chart, okay? The daily chart corroborating more data there, though, also. But every time frame below the 12-hour chart looks like a bearish reversal with a massive volume spike as well. Those are areas, again, coupling that with the fact that we do see longs drop off and take their profits and shorts do begin to pick up. Again, these are areas that I look for in the market to go short from. Daily close above 3,700 bullish. Well, here you go, man. Here you have the break in market cycle right here. So Jay Constant, to answer your question, the way I would look at this is, here you have the break in market cycle with an indecision doji. So you pretty much just have this period of consolidation before the beginning of a down move. And that is really topped out with the close of this candle and the open of this candle at around 3,900, 3,904. And you can see that's absolutely where we also got rejection from as well. Again, the same thing with this high volume node in this period of consolidation as well, where the downturn really began. So we were able to, you see the same thing here, where you have a beginning of a, you have a little bit of a period of consolidation, then you have a down movement, and when you are able to actually close above that area, that was that 34.53, you did actually move up here to 3,600, and then again, but you have not closed above this market cycle right here. Again, cycle is probably the wrong word. Market structure. You haven't closed above this market structure right here, which really was your breakdown point from this area. Now, again, I was excited about that close above 3,600. We did get an hourly and a 4-hour candle close above that $3,600 period. And for that reason, you could have potentially taken this long trade here to the upside. You'd still be in nice profits on that. Hell, you had an 8% trade on the table. But you have to wake up every single morning and realize that the markets change and see what the markets are doing. And just looking at this, man, this does not look like a strong area for a continuation of the uptrend. You had this nice pullback. You had this immediate reversal off the candle, off this off resistance, and look at the falling volume. I don't think that the bulls are going to be able to push this up. I would be looking for a healthier retracement right here, which is why at this point in time, after seeing this, I am healthier and safer in a short position, I do believe. And if I'm wrong, I'm wrong. It's okay, man. If I'm wrong, I'm wrong. I just look for higher opportunities to short. 200 period simple moving average on the 4-hour chart as well. A lot of areas here, man. A lot of areas. High volume node on the higher time frames. 200 period simple moving average here. But the biggest outlier to me, man, is this top of the uptrend, the bearish candlestick pattern, the volume spike, the high volume node. Looking at that daily chart where you do have a reversal here, so you do put in an indecision candle doji, you do break the daily structure of bearishness, you do have a little bit of a weak bullish movement on low volume, and then you really continue the downtrend. So this is where you'd measure your Fibonacci from. Thought I saved that as a template. And interesting, that is going to be the 886, isn't it? That is going to be the 886. You weren't able to close above your 886. Interesting. Okay, I like that. There and here. All right, let's get back to the chat. Nitin Soki says, on BTC, I see your point on both shorts and longs. What I don't see is what is the level of the risk you are trying. I assume you ask by that, like, do you mean like what leverage am I using, or are you asking like what my risk level is? So my risk level is 3%. So for example, if you have a $5,000 portfolio, you only allow yourself to lose 3% of your portfolio in any individual trade. So when you're looking at a chart and you're figuring out, okay, I want to go long, say you're looking at this like I am right now, and you're like, okay, look, we look pretty goddamn overextended. So let's go down to something like the 4-hour chart, and I'm going to figure out like what's going to be my trigger for going long. Okay, what's going to be my trigger for going long? So you look at this, depending on what your data metric is, and you're like, okay, well, if price closes below this point of control at 3708, if price closes below that HVN, or if price closes, you know, the other candlestick way to look at it would be like, okay, if price is able to close below this resistance right here, all right, where you had candlestick body closes that formed your initial resistance, the pullback, and then the breakthrough, all right? So really your breakthrough area. So right here, 37.44. Say that's going to be your trigger for going, going short. And you're looking at this and you're like, okay, well, where would be a good target? You're like, okay, I see we have this LVN below us, so I expect that if price does close below this level, we'll probably move back to retest this area of consolidation. Now, the way that I do things is I would look at this area and I'd be like, okay, well, we have a wick here. And we have, so there's going to be my first take profit target. And then we have other ways to do it too, is then after that, you could look at this wick, all right, if you're really looking at scaling in very small orders. But then I'm going to target the top of the HVN, and then I'm also going to target the point of control as well. Okay, so there's something like a short trade with a 3 scale out position. You could do 60% of your capital here, 30% here, 10% here is a way that I like to do it as well. And so you're looking at this bad boy, and depending on how you do it, you're like, okay, I'm going to take a close below this level, so let's just assume this level, okay? And here's your let's just cut the baby and take you to take profit too. Okay, so I do want at least like 1.5 to 2 risk to reward ratio. Okay, so I need to tighten my stop up, and also, but that really needs to be realistic as well. So let's say that if I'm going to initiate a trade here, if you just want to look at this as a 2 to 1 risk to reward ratio, okay, you'd set your stop there. What I like to use is ATR 2.5. So here's ATR, or 3.5 actually is the way that I like to do it. So we have ATR coming in around $93. So this is going to be a fairly ranging stop. So if we do set your risk at 93, set your risk at 93, that's 1x ATR away from price. Okay. Now, if you want to make this more sustainable, you could go down to a lower time frame, or you'd have to set lower targets and just assume that you're going to have to either accrue more risk or accept less risk. It's however you want to do it. But let's just take this as an example, just so we can talk about risk management. So say you determined your stop there at 1x ATR, although you can also use 3.5 and actually look to enter up as high as 2x ATR away from price, or you can just say, no, look, this is going to be something like a short scalp. If price does close below here, I'm going to be taking a short position, and I'm going to exit the trade if price goes above this wick. However you want to do it, however you're looking at the market. So we have a risk of 1% in that particular situation, and if we're just using our ATR, then we're going to have a risk around 2.55%. Now say you're like, okay, I want to use 5x leverage. Okay, so that's 2.51 times 5. Okay, that's going to be 12.55% that you're going to lose if that trade goes against you. Okay, now you're looking at, depending on how you look at that, are you willing to lose 12.55% of your trade on a scalp trade? No, absolutely not. But you are willing to risk 3% of your portfolio on a scalp trade. Typically how you do it. So you have to figure out, okay, the capital that I put into this trade has the potential to lose 12.55%. Okay, but I only want to lose 3% of my portfolio. So if you have $5,000, that's $150. So what percent, or 12.55% of what number? Is that right? Yeah, 12.55% of what number is 150, where 150 is 3% of your portfolio. Caution, math incoming, guys. So take 100 divided by 12.55, okay, you're going to get 7.968, blah, 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 and times it by 150, okay? That's going to give you, of what number 12% is 150. So that's telling you that you need to put $1,195 into this trade. If you are willing to lose $150, if you get stopped out at that 5x leverage, 2.51% risk. Hopefully that's clear. I go over this at length in the webinars with the members, because I always start with risk management. Because the reality of the situation is that if you start with risk management, you'll be okay. Only allowing yourself to lose 3% of your portfolio on a bad trade means that if you have a 10 loss losing streak, which you will have, you're only going to lose 30% of your portfolio. You can come back from that. You're only going to lose 30% of your portfolio. You can come back from that. If you don't have risk management, then most likely if you have a 10 loss losing streak, you're going to lose 90% of your portfolio. And this is unfortunately like what has happened to so many people that I have helped mentor in cryptocurrency. Like they come and they're like, hey man, I've lost $20,000 or $50,000 or $100,000. And, the first question I ask is, okay, well, what was your risk management strategy? Obviously we had the bearish downtrend and a lot of your positions would have gotten stopped out. Did you move to fiat? Did you move to tether? Did you hedge? Did you continue to trade? Did you continue to lose? And the reality is that they would have done much better for themselves just having that risk management strategy. Could they still be down 30, 50, 60%? Yes, but most of them didn't, and they're not down half. They're not down 40, 60%. They're down 100%. They're down 95%. They're completely, out of the capital that they started with, which thankfully for most of them, they got in around, mid 2017, 2016. So they're able to make a whole lot, but Gene, man, thanks, man. Gotta watch crypto. What's going on, man? Mr. Dopamine, what's going on? Parker, what's going on, brother? Always here for the Litecoin. Hey, man, I'll check it out for you, brother. Daniel Clerks, what's going on from Holland, man? Eli back, good time to short. That's what I'm betting on, brother. Pepo Max, the volume is shit right now. Looking good for a short. Thanks. Saqib Mahmood. Hey, what's going on, man? What's going on from Dubai? Mike Sarasano. What's up from New York, man? Hey, in the city, brother. What's the best place to buy altcoins? Binance would be my altcoin exchange of choice, man. K7 Jixer 1000, love that fucking bike, man. Crypto market cap headed back up to 180 billion. Got lost there for a second. I think we're going back up to 180 billion. Billy. When did we actually see our low? The 15th? Yeah, the 15th. We had $102.8 billion market cap. We have injected about $24 billion back into capital, man. That's not bad. Nothing to get overly excited about, guys. Nothing to freak out about, but it is a nice positive bullish sign, guys. Of course, you know, it's always nice to be able to go over to the heat map and see this. Let's refresh that, baby. It's always nice to see this, guys. It's always nice to see this. BSV up 16.42%. God damn. I want to go take a look at that flaming garbage. Because you guys know it's the next Bitcoin.
It's over 9,000!
I'm hesitant to read that name, but Beatrice, hey, thanks for the sub on YouTube. Highly appreciate it. BSV, man. See, I just see these exact same things, man. This is the 4-hour chart. And when I do see an aggressive movement upwards, and then a blow off top like this where you have a massive spike in volume like right at the top of an uptrend and then big wicks to the upside, this does not bode well for me. These are areas where if I have been in a long position, I look to take my profits, and if I could short BSV from right here, I would. Those are speculative bets that I like to place entries on. We were barely able to close above that consolidation entry box that I had talked about on the last trades for BSV. So back in time, we were right here, and I talked about these potential upside targets. Again, like twice that I've charted BSV on the stream, and it's played out. But yeah, we broke down from that right here. You know, both stops would have been triggered if you were trying to enter here at this point in time. So look, this is a 1, 2, 3, 4 tests of that support level. Didn't hold, man. The more times you test support, the more it's going to break down. And this actually kind of looks like in slow-mo, like almost like the Bitcoin chart, almost like, you know, just spread out. Whereas this is only spread out over like, you know, a few weeks. That was spread out over a whole goddamn year. But yeah, you haven't even really gotten back up. Look where you get rejection. You get rejection from your high volume node right there. So yeah, was BSV a good trade from anywhere down around here? You did pull back to that 786 Fibonacci retracement. Yeah, it's great, but not super excited. You only made it back up to your 50% retracement, and you've really got to get above this before you're super bullish on BSV, honestly, at this point. This still looks like a downtrend with a relief bounce. So you do break that. You don't really pull back to test it as support, though. You do get a little bit. I mean, you could have taken that breakout trade right there. See how I've talked about it before, where you do get a breakout, and then you don't always the initial breakout gets faded, so you wait for the pullback, and then you can re-enter. So you do actually see that it did. If you look at that trend line, yep, it did break, get initially faded, pulled back, found support on that trend line, and when you saw all these wicks to the downside, that would have been a decent place to enter, and then you can take it up. But is this an area that I'm looking to get into BSV now, man? Again, maybe my bias comes through in my analysis that I do, but I tend to be a cautious trader, man. I tend to be a cautious trader. And I'm okay where, you know, I don't always have to trade, guys. You know, if I don't like the way something looks, then I'll just wait, man. And I don't like the way the Bitcoin looks, especially to the long side right here. Again, you know, could this work out for you? Yes, and I wish you all, you know, and again, it's not like I'm right and you're wrong, blah, 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 blah. I want everybody here to do well in trading, so the only thing I can do is just point out, you know, what I see. I will read this, Mr. Krypton Mining. Today I ran outside naked screaming Bitcoin, and my neighbors said, "Hell yeah!" Together to the bottom. Everyone gets scared even with TA. Why don't just write it to 4.4K and short it there? Because I'm not overly confident that we will make it to 4.4K. I'm not overly confident that we will make it to 4.4K. That's why. And I don't like generally longing things in a bear market, man. I don't. You know, I'm very tentative, very cautious about this relief rally. Again, I was talking about it for a while, but it seems like we've gotten kind of what I wanted. Would I be happier with obviously the valuation of my spot price if price moved up here a little bit? Yes, but again, it's not something that I'm going to get super excited about because I do think that in the long term, this is not the bottom. Like, this does not look like a bottom in what shape soever. This looks like a bull trap to me, man. Looks like a bull trap, and it's worked out nicely. Like, obviously I was able to take a play off of it, so I'm gonna be quite happy, dude. Like, again, I already took it from 31.75 to 35. I took it from an average entry around 33.30 to 36.20. I took it from 31.64, actually average entry around 3200 to 32.80. Just scalped it, and now I'm just looking for opportunities to rev back up into a more midterm short, man. Yep. Hey, crypto friends, I'll check out XRP for you, brother. Bitcoin Cash to the moon. Yes, Nitin. I'm looking at your question about the interest rate hike. Yeah, it's looking like the forecast is going to be 2.5%, a rate hike of about 0.25%. That announcement is going to come out at 2 p.m. Eastern Seaboard time today. So yeah, the markets are having a nice little bit of a pop, kind of in preparation of that. So we'll see. Because if interest rates stay the same, then if interest rates stay the same or lower, then that means that credit supply will stay the same as it is right now. If the interest rate does get hiked, even 0.25%, it means that to a significant degree, credit will dry up, you know, more than it's dried up right now. And just with all the fear and uncertainty in the traditional markets right now, guys, again, I know people don't like to hear this, man, but Bitcoin has been following the DJI and the SPX quite closely. And if that takes a more significant downturn and does break the support that we have looked at, again, I don't like to look at traditional markets here, guys. I spent 5 years doing that, and I just really have no interest to do it. Again, it is important, I think, to get an overall view, but you can just turn on CNBC and see that everything looks like shit, man. So, yeah, we'll know a little bit more around 2 o'clock. 1 o'clock my time, actually. So right about the time I'm going to be going off stream. All right, let's get back to the chat, man. Just trying to get to everything. Yeah, I'll look at ETH, and I'll look at ETH, bro. Okay, going all the way down, man. Sorry.
It's over 9,000!
Hey, we got a guru in here, man. What's going on, brother? Guru Llama. Hey, Trade Mud. What's going on, brother? Thank you so much, man. All right, let's get into, sorry guys if I'm going to miss some questions, but I do want to get into ETH USD and XRP USD. Okay, so seeing actually the same thing here on ETH USD, guys. This is an area where I would potentially be looking to short, man. I mean, this volume is nothing that I'm overly impressed about. It's about the moving average of volume. Looking here at the daily chart, and another way that I use ATR, guys, is here. Look at this. Look at the low volatility of this actual breakout. See that ATR is quite low, even though we're having this nice breakout. Now, I know that a lot of people like look at. I don't trade off these things, man. Like these EMAs. I just kind of have them up here. I used to trade off of them, then I found that they weren't highly successful. So the way that I know you're going to see some people talk about this is that, look, guys, we've made it over the 21 exponential moving average. Oh, that's fantastic. This is traditionally, I mean, really, like, this is traditionally your call option. If the daily candle does close above 2100, you would look for a potential movement from 2100 to the 55 EMA. All right, so that would actually be bouncing you up to around 140, although depending on the time it takes you to get there, that's, you know, the EMA will probably creep down here slower or closer to you. However, the reality of the situation is that I trade based off horizontal support and resistance, guys. And so what happened? You broke down from this heavy volume node area of distribution. Broke down, consolidated for a little bit, and now you're getting a nice little relief rally just because Bitcoin's pumping, man. Just because Bitcoin's pumping as well, guys. Looking at the longs to the shorts here, actually in the background, as you can see, you do have the shorts start to die off at this point in time. You do see the longs pick up around this region, and now they're taking profits. They started taking profits right on this candle right here. So you don't have a lot more potential buyers anymore. Because the shorts have really exited out of their position, and now it's going to depend on which way spot price puts this. So that means that longs and shorts data becomes less relevant, and that means that we have to actually look at horizontal support and resistance in the marketplace, guys. So we do have this, again, I charted out the support line right here, which was really the break of the downturn here. This is the high volume node right here that we're currently getting daily candle close rejection from, and overall we do have this larger area, this high volume node, that it's hard for me to get excited about a movement upwards. Again, I talked about this the other day. I talked that if we did, what did I say? I said if we did close above 100, we could potentially see an upthrust to around 110, which is exactly what we did. Again, guys, to me, that's played out. Could this move higher? Yes, it could. But overall, we are moving into this high volume node distribution order block. So above that, we do see the volume profile start to get significantly thinned out, and you don't really have big overhead resistance until around that $140 area. So is this an area that I'm looking to want to long from? No, not yet. Do I look back in time and say, hey, I was wrong about a lot of this and I should have been overly excited when I should have been overly optimistic? No, I won't, because if we are going to be entering into a more sustained relief movement to the upside, or potentially the beginning of a low time frame bull trend, then there'll be plenty of time to enter into it. Until then, looking at the overwhelmingly dominant downwards trend that we've just been in forever and forever and forever, and seeing it how we bottomed here, guys. This was not capitulation. You know, the market does not give you a week to buy the bottom, man. The market doesn't give you a week to buy the bottom. You know, the volume's not overly impressive on this movement upwards. Looking at the daily candlestick, you know, again, I do have to wait. I am going to wait until the daily candle closes, but this is an area that I would expect you to get a little bit of a retracement from, at least back to this area around $100. Now, we pull back $5 to $100. You know, then, you know, we'll kind of see what the bulls do. If the bulls start to initiate positive movement, and I do see some bullishness from that area, if I do see some nice green candlesticks or something like a bullish reversal candle, maybe like a hammer or, you know, a hanging man, an inverted hanging man or something like that, then yeah, maybe I'll take a stab at a speculative long around that area. But I don't long resistance, guys. I short resistance and I long support, guys. So if this turns into support right here, where we have kind of the top wicking area of this previous slight distribution area, and really kind of the beginning of the breakup movement right here, then yeah, I'll be okay. But 21 again, and if you are trading the EMAs, guys, you do have to take these with a grain of salt. So here's the daily chart for Ethereum dollar. Obviously, we're coming up when we broke the 21 EMA. Usually doesn't take on the first go through, man. This usually gets faded. We come back down, we establish support, and then we'll take, you know, we can take the break on the second go through. So if we do break that 21 EMA on the second go through, again, maybe take the breakout long on that, because that will be the second pass through up, more confirmation, especially after finding support at a higher level here. But for me, the more determining factor would be this break above, kind of like where I have this green line right now, where we have this HVN. But again, the thing that makes me want to take less risk with this, or definitely put less capital into this trade, is this trifecta of HVNs on high volume nodes that you have coming over you. I mean, this is just a huge band of resistance that you have to get over. Now, once you get above that, you have a fairly shallowing out of the volume profile up here to around $135, $140. I think that's a better trade. And again, that's also congruent with the EMA strategy of not taking the first pass through, not taking the first break of the EMA, waiting for the pullback, taking the second pass through. And you can see this probably on the lower time frames. If you go to the 4-hour chart. Yep. Every time, this is an area where it's looking like we are going to get a pullback here. We do see this. I don't know if I like that anymore. Again, I don't really trade based off these wobbly trend lines. They're more up there just for purpose of something to look for. We do have that 200 simple moving average coming in on the 4-hour chart. That is situated right above us right here at this higher HVN. We didn't quite make it all the way to that. So by the time we do get a pullback around to that, maybe around to that, what was I saying on the daily chart? Let's look at the volume profile. Yeah, around that $100 area, $101 area. And then I'll kind of be okay if we do end up finding support there. But I mean, just the moral of the story here today, guys, is that if you've been in long positions on pretty much everything, at least looking at Ethereum and looking at Bitcoin right now, awesome, dude. You listened to the stream, you took the advice, you're doing okay. Or you're generating your own unique trade ideas, which is even better, man. But just look at the media sentiment, man. Look at what everybody's saying. Look at the key words, the psychological words that people are using. People are overly enthusiastic and optimistic in an overly bearish market at the top of a relief rally. I don't know. I get excited about shorting this, man. I get excited about shorting this. Unfortunately, XRP looks exactly the same. On the daily chart, you actually have a little bit more bearish confirmation here. You do actually come up to that 55 exponential moving average here on the daily chart. You actually do wick above it for a little bit of a stop loss hunt up to this LVN territory, but you are not able to close the daily above this this top range of the value area. More than likely either consolidation from this point moving sideways or actual pullback. Again, you never, once you kind of broke this area, you never had a nice healthy pullback to test this area as support. So let's make this a little clearer. Let's get rid of longs and shorts. Let's get rid of that. Just use the volume profile. All right, so looking at XRP to the dollar on the daily chart, again, I kind of see the same thing. I do kind of see, not so much as with the others, I don't necessarily see the blow off top like I do on the lower time frames. If we do go to the lower time frames, let's see here. Yeah, you can kind of see it on the lower time frames as well. You have that evening star doji formation, potential shooting star candle pattern right here. You do have that pretty massive, significant blow off top of volume where everybody's just longing at the top and kind of getting just smashed down upon because you do have savvy traders. Hey, OJ Sons, thanks for the sub on YouTube, man. Highly appreciate it. You do have all retail piling in right here, and you have right here, kind of at the top of this, kind of really here at the top where the selling pressure began for this latest downturn. You do have sell orders for savvy traders who are putting their sell orders in this LVN right above this HVN. in this low volume node territory where you often will see stop loss hunts because often individuals want to, or large savvy traders want to push price up to these LVNs because that is where a lot of stops for shorts are going to be placed. So they do like to place their orders there because they know that when retail pushes price up there and taps out liquidity, they'll be able to actually get liquidity for their short positions filled. So we did blast right through this. This area, this consolidation order block right here, which I have now changed to green. So we would be expecting, if the bullish sentiment is going to continue, Suji L, hey, thanks for the sub on YouTube. We would expect, if this bullish sentiment is going to continue, a pullback to this region to test it as support, because we don't really see that. Not in a significant way. This for me is just a little bit of more consolidation. Putting in a little bit of, I mean, you could look at this as a bullish pennant, I guess.
It's over 9,000!
Hey, thanks, Mark. Welcome to the channel, man. You could look at that as a bullish pennant, just as you would have looked at this as a potential bullish pennant. I don't really like the way it looks. This is why I don't trade chart patterns, because they're so subjective. They depend on what you're looking at. And this is why I just look at volume. Just, the more time that you spend in the market, the more you can just get a feel for what positions you feel comfortable with, man. 17% from the break. And you actually do get that same thing here. You do get that measured move. So if you were overly bullish on this, this would give you a measured move of about 13.76%. So if we were to break to the upside right here, it puts you right here, right at my higher take profit target level right here, where I do have that red line around 43 cents. But again, XRP was holding up. XRP is kind of an anomaly, honestly, in how it responds to Bitcoin price being negatively correlated, except for when it's not negatively correlated. Obviously it has caught the bullish enthusiasm and pump of everything else. But if we look back over here, honestly, like, the volume isn't super convincing. Like, look at the amount of volume. Look at the faith that people had in this bullish rally. Look at all the volume, and look at how high price has been able to go, but without the same amount of volume on spot price. A lot of this, honestly, is most likely shorts taking profits, allowing some shorts to be squeezed a little bit but again, a lot of these shorts are in comfortable positions. Bottom shorters always getting squeezed. Bottom shorters always getting squeezed as always. And now I'm expecting to see top longers get squeezed as well. Let's go take a look over at our longs and shorts on XBT. Yeah, shorts dying off. Longs popping up here, running into what would now become a resistance area. Let's look at this, not like a bar chart, but as a candle chart. I wonder on the lower time frames if we did get any resistance from this area right here. All right, so what do we got overhead now? All right. Getting parched, man. Hey, Real Stog Roach, what's going on, man? All right, so let me explain what I'm looking at here a little bit. You know, the way that I'm looking at this, honestly, looking at the XRP USD longs, and I combine them with the XRP BTC longs so that I compile the data between the two markets. Often the mistake that I will see people is that they only look at the XRP USD longs, or they'll only look at the XRP BTC longs. So you can actually compile the data and get a clearer idea for how, for exactly how many people are long or short. Let's take the labels. That's not what I wanted. I don't want to see those labels. Oh well, it doesn't really matter. I'm just not really seeing the the overall enthusiasm that you would expect to see, honestly. I mean, look at the look at this period of the longs, where you do have a long period of accumulation for the longs before they're able to move up. And anybody that tells you you can't do technical analysis on longs and shorts data, I think is being disingenuous, honestly. This more to me just looks like oversold. Oversold longs, if you're looking at it in that fashion, and a natural bounce, not an actual reversal in trend right here. There's just going to be a lot more that I need to see before I'm convinced that the bottom is in. Now, can XRP see a little bit of an upside here? Yes. Again, if you are going to be banking on this bullish pennant playing out, and again, I don't really like the way it looks, but I didn't really like the way this one looked either, and it played out. So again, this is just to be clear here, looking at the area that we're at with XRP USD, and looking at the relatively weak volume as opposed to this. I mean, you know, we saw the same thing here, like where XRP was able to move up 20%, and in this particular situation, XRP was able to move up 40% on like pretty much damn half the volume. Okay, that does not imply to me really strong movement. Again, I don't see any signs down here of capitulation. I don't see any signs of a complete blowout bottom. I do see a period of accumulation here and then a nicer run up, obviously, but on low volume, guys, there's not a lot of faith and strength behind this movement, unfortunately. You know, and I wish I could sit here and tell you guys that the bull market's in, and we're just going to go up and up and up and up. But until I see either A, clear signs of capitulation, or really maybe until this goes on for like another week, honestly, I'm still going to be looking for opportunities to pretty much strategically look to short everything. I'm probably going to stay away from XRP USD for a while because it tends to behave a little bit more aberrantly. Again, if we do have that, if we do take the measured move off this flagpole, that is another 14%. So potentially moving us up here to my target. That again, I already had this line on the chart of about 43.75 cents. Potentially maybe that area. But in the short term, again, I'd be more comfortable taking a low leverage short position from here as well, and just looking for opportunities to add to it, because I think that in the long run, that probably will play out much better for you. At least in the short term, definitely. Would expect this to pull back and retest these areas as support. And then we'll see if we actually do get consolidation again in this range. All right, so when I get back, guys, again, it is 12:17. I've got to cut the show off today for sure at 1 o'clock because I do have some family events that I have to take care of. There will be, unfortunately, sorry guys, no show tomorrow. My son has hernia surgery, so I will be going with my son for the hernia surgery. We'll be at the hospital most of the day. Nothing to freak out about, guys. It's an outpatient procedure, so should be home. And if I get some, you know, if things work out okay, I might hop on and give you guys a quick market update depending on what's going on tomorrow. Of course, still be available for the members section. Will be, you know, I already posted my trade updates and ideas for this morning, and I will be continuing to do so throughout the day as well, guys. So I'm going to take a quick break. I've been live for about an hour and 20 minutes. I got about 40 minutes left for the show, so I'm going to take a 1 to 2 minute break. And when I get back, guys, we're going to go over a few more data metrics that I want to point out. I do have an announcement to follow on yesterday's announcement, and we'll take a look at some requests, guys. So hang in there, guys, and keep it crypto. Hey, what's going on, guys? Thanks for hanging in there with me. All right, we're back for probably another 30 minutes to do this, guys. All right, so one thing that I want to, one of the points of this channel and one of the points of cracking cryptocurrency is to genuinely teach people how to take positions, or at least to show how I set up positions. Again, I always recommend, and it is my hope that individuals, again, you should always be trying to generate your own unique trade ideas. So I highly hope that you never go on to YouTube or Twitch or anything like that and look to follow along with what they're doing. Now, can it be a good start? Yes. Obviously for the members group, I do post all my trade ideas and trade setups, and I am, statistically a profitable trader. Just, I post all my trades online. You can go back and see all my tracking sheets. I keep accurate, detailed trade journals of all my trades with full charts of why I take the setups that I take, justifications and reasons. As long as if you find somebody that you agree with their style and you feel congrues with how you approach the marketplace, if you are a beginner to trader, that is an excellent start for you as well. But it is highly recommended. I highly recommend that you guys work on fleshing out your own trading style and generating your own unique trading ideas that are generally not consensus trading ideas. The problem with trading with consensus, the problem with doing what everybody else is doing, is that you put yourself in a dangerous situation where retail all tends to act at the same time in the same direction. So if you are retail right now and you are attempting to long into this market, regardless of whether it plays out, whether it plays out is less important, because you can get lucky off a bad trade setup and you can make money. The problem with that is that if that goes on for a while, and this is the problem that happened in 2017, so many people got lucky in a bull market because it didn't really matter what you bought. Everything was going to pump because Bitcoin was going to the moon. We were going to the moon. And it didn't really matter what you bought. You were buying every pullback. You were buying every dip because that's what you do in a bull market. What do you do in a bear market? You look to short every rally. You look to short every pump. You look to short every massive move up. And you look definitely to short areas in the market where retail is FOMOing in at the top of the movement to go long. Areas like that definitely excite me to go short from, and that's where we're sitting at right now. And, you know, this is also played out by, and again, looking at consensus, if we go look at data mesh, we can actually see, look at the longs right now. The longs, again, I've pointed this out ad nauseum, but the longs have just completely fallen off the face of the map. The funding rate for the longs is what right now? Like 0.005, which is nothing, you know, like they're begging individuals to go long. Look at the shorts. The shorts have skyrocketed in spite of the funding rate for the shorts. The funding rate for the shorts was, you know, the max is 0.0016. So is that overly expensive? No, but as opposed to the expense to hold a short position, as opposed to the cost to hold a long position right now, it is relatively high. So uncomfortable to hold a short position, yet individuals are still saying, nah, fuck this, I'm going short. They've just picked up ever since 7 o'clock this morning, my time. So about 8 hours ago from right now. And we see the same drop off in the longs as well, just healthy taking profit. And this is why this is an area of the market that I would be excited to short from. And again, it just depends on what the market does, whether I hold the short open for a long period of time or I look to cover at some of these key points of support and resistance. Again, you know, coming in around, you know, around the $3,500 range, around the $3,400, $3,300 range as well. If those get crashed through and broken through, then guess what? I keep my short open. I potentially add to my short. I scale in as price continues to move in my favor, and I look to take it to the downside that way. So if you are looking to enter into a short from this position, let me show you one way that you could potentially take a setup. Let me pull up a fresh chart. Let's actually do this. Okay, good. Ooh, I just saw a Theta token there. I do want to check in with the good old Theta token. Let's see what's going on with Mr. Theta. Guys, again, I remember we were back here in time. And when we had that Theta pump, man, I had to literally talk people off the ledge because people are like, "Oh, this is a long hold for me, man." Sorry, man, it was not a long hold. It's not a good idea. It's not a good idea. It's done nothing but continue to go down. And yeah, do we see some little baby pumps in there as you see with altcoins? Like, yeah, but not overly impressive. I mean, Theta has not responded to the market at all. Where we've seen everything else pump up, Theta unfortunately is one of those coins that has not moved whatsoever. All right, so let's take a look at let's generate this idea on the 1 hour chart right here. And I'll show you guys how I do this with ATR. So we'll pull open average true range. You just go to your indicator and type in ATR, pull up average true range, and you open up your data window. All right, so we see right now ATR is around $57. All right. So the way that I look to enter into this area is, first off, I identify what would be my downside targets. So what I'm looking at here is I'm looking at upside wicks. These were areas of liquidity where individuals were interested in entering into the market, or where individuals were looking to short from. So these are areas in the market where there were lots of limit orders. Let's get rid of that developing volume control. Developing point of control. Let's get rid of that. Okay, so I've already identified a target here at 35.90. Okay, now I need to manage my risk. So again, I said that ATR was about $57, so I'm going to pull open Mr. Calculator here. And the way that I like to do this is I'm looking at ATR times 2. So 57 times 2 is 114. Current price is 37.82. So 114 plus 37.82 gives us 38.96. 38.96. So we'll just put a line in there, go to the coordinates, and go 38.96. 38.96. Okay. All right, so now what does this represent? What's that 38.96? Well, that is my optimum entry zone, actually. That's where I would be willing to place the majority of my capital for this trade, expecting a stop loss hunt of this area, because we do now have on the hourly chart a slight period of consolidation, which is more than likely going to play out to distribution, but we always do have a stop loss hunt out. Now, another thing that you can also do is simply take current price at 37.82. and add 1 ATR, which is $57, which would give you 38.39. Okay, so we'll put that right there. So these are two areas where you could be placing limit orders to sell. If you do want direct exposure to the market at this point in time, you could, yes, enter in this area, but again, I only do that with about 10% of the capital that I am allocating to this trade. And how do I determine what my capital to allocate for this trade is? Well, now I take ATR, so that's our $57 times 3.5. So I use a multiplier of ATR that is 3.5. So $57 times 3.5 is $199.50. So we add that to current market price at 37.82. Again, it's 37.89 now, yes, but I'm going to keep it at 37.82. 39.81.5. So we pull out another horizontal line. 38.91.5. Is that right? That can't be right. I think I made a mistake. Hold on a second. Maybe I did my math wrong. Give me a sec here, guys. 57 times 3.5 plus 37.82. 39.81.5. I must have made a typo. There we go. Okay. Excellent. Fantastic. All right, and I've already got my take profit target right here, but if I am entering into these upside areas, I would be looking to take a scalp potentially around this area right there as well. Basically a return from if I'm entering into the market right now. So I would set, if I want a direct exposure to the market, I could enter into about 10% of my capital right here, targeting this area right here. You could also potentially even target this area right here. Again, I'm just targeting wicks to the upside. This is how I set take profit targets as well. All right, so now I'm going to, these are going to be purple lines, which represent my entries. And this is going to be a pink line, which is going to represent my stop. So I've entered into about 10% here. I'd enter into about 30% here, and I'd enter about 60% here. And that would give me an average entry around this area. That'd give me an average entry around 38.63. Let's make that orange. Okay, so now I can determine what my risk factor is. So I'm going to be entering into a short position with an average entry right here. My stop is right here, and my ultimate target is right here. I see that I have a risk-reward ratio of over 2 to 1. My midterm target is actually going to give me about 1.5 risk-to-reward ratio, and my short-term scalp target is actually going to be less than a 1-to-1 risk-to-reward ratio. But I do see that my ultimate target is above a 2-to-1 risk-to-reward ratio. Again, I'm comfortable with taking like 1.5 to 2. Again, more excited though when it does get over 2. So now I see that my risk for this particular trade is 3%. Now let's say I want to use 3x leverage. Okay, so that means my risk is actually going to be 9.03. Okay, so let's say I have a $5,000 portfolio and I'm only willing to risk 3% of my account on this individual trade. Okay, I'm only willing to lose $150 because $150 is 3% of 5,000. Okay, so if I'm going to be losing 9% on this trade, 9% of what number is 150? So you take 100 divided by 9.03, you get 11.047 times 150. Okay, 1,661 contracts. All right, so I'm buying 10% of that. So let's just say 1,661. 1,661. I'm buying 10% at current market value. So I'm buying 166 contracts at current market value. Then I said I was going to be entering in the 30% at 38.40. So let's see here. 1661 times 0.3. So I'm buying 498 contracts at this level right here at 38.30. I'd be entering in with the rest of my position. So 1661 times 0.6. I'd be entering in with 996 contracts at 38.96. That's how I'd go into BitMEX, and I'd place my orders in that fashion. I would manage risk with a stop market trigger right here, 38.39.81. And then I would set my take profits probably either 30%, 30%, 30%, or 60, 30, 10, depending on how conservative you want to be. The 30%, 30%, 30% is aggressive. The 60, 30, 10 is less aggressive. And there you have, in my eyes, a profitable trade. And if you get stopped out of this trade, doesn't matter. I mean, it matters obviously for your account portfolio, and you need to look at how you're taking trades and setting up trades. But this is a type of trade that I would be looking to take, and how I do set up trades when I'm looking at a period of consolidation. So hopefully that's been helpful. But this is just an idea of, you know, what I want people to be learning, man. Austin Power says we are all going to be rich soon. Hey, man. One day at a time, one Satoshi at a time. I do want to take a look at the bid-ask sum. I want to look at the bid-ask sum on BitMEX. Within 5% of price. And yeah, we had massive spikes in the bid-ask sum here, basically between the 16th to the 18th, and I was excited about that. Again, I was using that as justification for the areas where I would be looking to get a relief rally, but now we have seen that bid-ask sum fall back down here into that consolidation range, still slightly on the uptrend, but we've had significant chunks taken out of the bid-ask sum. What this is representing is the fact that the number of limit buys on the market books have fallen off dramatically at the same point in time that we do see the asks rise up. So not a clear way to trade this on the particular in our particular time frame right now. If we do actually see that overall the bids are higher than they've been in this previous bearish downtrend. And when we did see a massive spike up like this, this is a good exciting time to be looking for a potential to go long. Just conversely, if we do see the asks behave in the same manner, when we do see the asks kind of hanging out and then we see the asks skyrocket right here, we're looking at areas to go short from, because that means that selling pressure is increasing on the books. Just like when we see bids skyrocketing right here, we see that buying pressure is increasing on the order books. We can also go take a look at something like vcdepth.io or vchealth.io and look at the historical market depth for the day, and I'll refresh the chart just to make sure I have accurate data. Okay, so interesting. So let's go look at 50%, because that is incorporating the entire order book right here. Okay, so still overall, within 50% of the order book on BitMEX, there are still more buy orders on the books than ask orders on the books. But we do see the sell orders holding up relatively nicely as opposed to the bids, which have taken a dramatic fall off. So this is the entire order book. And when we're looking at 5% of price, this is what we're expecting to move the order book in the short term. And we do see in the short term, we do see the bids fall off for the number of buy orders that are set on BitMEX. And if we look at the number of asks, we do see that they have risen significantly. All right, so let's actually take a look at vcdepth.io and look at the Bitcoin market depth ratio, because I like the way it aggregates the data a little bit better here. Come on. Don't die on me now, computer. There we go. Okay, so this is for the last week. This is the Bitcoin historical market depth. We do see that the number of money on the books has risen dramatically, really beginning on the 19th. Just look at this number of and really look at it. Look at the big spike right here. That big spike is actually congruent with sell orders that are coming onto the order books. We see really starting here on the 19th, we do see that spike up significantly. With brief dips down where actually the asks were higher than the sells, or excuse me, the asks were higher than the bids. So again, something to keep your eye on when you're looking at this. One way that I do like to trade this is that I do like to look for opportunities to be going long or to buy when I do see a dramatic shift in the MDR like this, when I do see the number of bids come in much higher than the asks. And then when I see something like this where I see that, you know, and I have to congrue this with, again, I put much more respect on price action, but this is just good confirmation data. when you're looking for directional bias. So going back here, sorry, this one right here. So we actually do see here, this is calculating the last week, and we do actually see here for quite a while, the bids did get filled, and then they dropped off, and then we do see the number of asks rise dramatically and hang out in this region right here. Aggressive market order still maintaining that 52 to 46 ratio right there, 52 to 47 market ratio right there. Let's take a look at Bitcoin right here. And go to Coinbase, or excuse me, Bitcoin. Nothing's really changed on the futures front. I do want to see, obviously the bulls are going to be in highly profitable positions. Yes. Okay, cool. So this is Bitcoin margin trading sentiment. So we do actually see a shift. So the bulls were just suffering here for quite a while, and now we do see the bulls in very profitable positions, and their profit is rising. So you have to put yourself in the mind of a bull. You have to put yourself in the mind of a bull in a profitable position. You also see here, look at this divergence, longs dropping off, shorts picking up. Again, we've talked about that ad nauseum. Shorts in unprofitable positions, longs in very profitable positions. So if you are long in a profitable position, what would you be looking to do? You'd be looking to take profit. If you are a bull in an unprofitable position, what are you trying to do? You are trying to add to your position to get a better average entry into your price. And again, we saw that when we looked over at the longs and shorts data. We saw the shorts picking up at the top of an uptrend, dramatically actually now. And we do see longs continuing to fall off, guys. Longs continuing to fall off. Seems that the smart money is on Bitfinex. All right, let me go back over to the chat, man. Mixie80, don't I use CVD, and what's my opinion on CVD? I don't actually know what you're talking about, man. I try to follow everything that Bennett talks about, but I might have missed that. You know, I'd missed his latest video on the crypto market breadth. So tell me specifically what you're talking about there, and I'd give my opinion on it, but I don't know what CVD is off the top of my head. Oh, let's see here. Hey, thanks, Eric. I appreciate that. All in the Mind 2006, so should be short now. I recommend that you generate your own unique trading ideas, but yes, I am taking it to the short side. OJ Sons asks, TDP airdrop with today's snapshot on HitBTC 1 to 3, is it worth buying? I have no idea what you're talking about, my friend. I don't really do the low cap stuff, man. Could be. But typically, my strategy for trading, when I have traded things in the past, like airdrops and hard forks, is to buy the underlying asset prior and let it ride up on the excitement that people are going to get free money. And then I tend to sell it immediately beforehand. I do not like to hold through the hard fork because you generally see an immediate dump afterwards where people are dumping both the underlying asset that they had purchased to get the free money and also the new asset that they got, which is the free money, because they're wanting to get their money from it. So very dangerous areas to enter. If the snapshot is going to happen today, I would highly recommend that you do not get yourself involved in that. Cogito Ergo Zoom says bear until the next halving. You know, I'm bear until 2019, like Q2 2019, because that's going to be roughly before the next halving, about a year before the next halving, and that's typically traditionally the best time to buy BTC. Jawad Riaz asks if I can look at IOTA. What are my general thoughts on the project? I don't know, man. It's kind of an interesting project. I do kind of like the idea of the Tangle. They do seem to be growing as far as traditional business links go. But again, you have to kind of take a lot of that with a grain of salt. But they do have partnerships with like some car companies to put automated driving data on their Tangle. I've heard a lot of different things about, again, I'm just a trader, not a programmer or a coder, man. I've taken pains to understand BTC on a fundamental level. I have not taken the same pains to understand a lot of these other projects on a fundamental level. I generally, there are analysts that I respect, and so I tend to deign to their knowledge as far as some of these projects go. And that's why from a fundamental area, like the only thing that I think that I care about passionately is Bitcoin as far as something like a long-term holder and investment. I really look at all these other projects as just opportunities to flip Bitcoin and accumulate more Bitcoin. But I do think that there are good potentials for some of them. I couldn't really give you like a deep down, down and dirty on IOTA. It's not really what I do, not really my thing. But yeah, I'll take a quick glance at IOTA, man. And K7 Jixer is asking. Since I do have to get off here fairly early, I do have some family things I have to prepare. Yeah, I'll take a look at Waves and IOTA real quick. What company do I use for social media sentiment analysis? GetPipster.com is really good, and Solium.io. So this is Solium.io. Okay. Yes, I use Brave Browser. Weed, man. No, I don't do weed, brother. I don't off the top of my head, Hayden. I will look into it. Mixie80, cumulative volume delta. Actually, so I'm familiar with it. That's actually transforming the price bars into, delta is the algebraic sum. So, yeah, I mean, I actually don't know. I understand the concept, but no, I haven't really looked into it too much, or traded around it. It'd be something to kind of play around with. All right. So yeah, Solium.io and GetPipster.com are the sites that I like to use. GetPipster you kind of got to register for, so Solium.io is what I tend to use right here. Analyzes social media sentiment. But again, you have to remember that I tend to be a counter trend trader, so I'm looking depending on where the market's at, man, depending on what price action's doing, man. If you're at the top of an uptrend and social media sentiment's really high and shorts are starting to get high and longs are dropping off, I look for opportunities to short. All right, so IOTA and Wave. It's gonna have to be quick, man. I'm sorry. Interesting. I don't think I've tried it out, IOTA, in a while. Maybe I did look at this yesterday. Come on, baby. There we go. I like that. All right, let's hide the lines real quick and just take a look kind of what we got going on here. Yeah, man, you know, IOTA looking like everything else. I mean, it had a nice little, you know, had this nice little period of accumulation that it put in, you know, just kind of as the market turned bullish. Had this nice little run up, forming a potentially bearish candlestick on the daily chart right here, an indecision spinning top doji, which could turn into a shooting star. Just let it play out, see if we do actually get a lot of selling pressure. You've got this pretty nasty distribution area to get over, man. Yeah, right there. You got this pretty gnarly distribution area to get over, and really hard to be positive about this until you see a break of this level right here, right at the top of the volume profile, which would also signify a break of this horizontal resistance level right here. Once you get past that area, then you're kind of entering an LVN territory. You didn't have a lot of trading around this area. You didn't have a lot of interest in accumulation or distribution. So these are areas where you expect price to move through fairly quickly. You see the same thing here. Maybe you do get a little bit of accumulation right here, or excuse me, redistribution right here, but nothing really significant. And you know, overall, this still does look like a strong downtrend. Now, if you wanted to I guess if you wanted to trade off the trend line, you can't use that. You've got to use this. Yeah, there you go, man. So you had this nice descending channel that price was able to rally and break out from, kind of at an unusual area. Again, do I trade chart patterns a lot? No, I don't. Did this make sense as a likely area to turn around from? Here. I mean, not really, honestly. Like it's within probably a standard deviation away from this top. But again, I look for resistance, previous resistance to become support, and you'd already broken pretty much past all of that. So you just kind of reverse right here in an area where I don't typically like to use, you know, which is actually the bottoms for support to become resupport. So you actually did have a double tap on the support. You got a very weak rally off of it and then ended up breaking through and just accumulating right around that area. And you're getting kind of a weak, you're getting obviously the same kind of bullish rally that you got from all the altcoins, but you know, obviously it's nice in a percentage, and it's in a percentage area. But looking at the daily right here, this again doesn't look like anything I want to long into at this point in time. If you wanted to be nice and safe and look for a healthy pullback, again, you know, you could be looking to get in around either a retest of this trend line. You could try to be bullish on that, and that allows you to have good risk management because that is looking like it's going to be a 50% retracement. Must have lost all my pretty Fibonacci things. I'm going to have to make a new template. So yeah, that'd be like that 50% Fibonacci retracement. So that actually would put you, let's see here, how many days would it take you to get there? Maybe like 1 or 2 days of downside, and then you could potentially look at re-entering this at around the 50% retracement or the 618 Fibonacci retracement in between 69.34 and 71.55. If this bullish movement is going to continue to the upside, potentially even take that up to this this distribution area right here. You pretty much, I must have charted this out because you did hit all the upside targets that I did plot out for this particular movement, except for this one right here. You just came within a few satoshis of it at 81.32. Price did actually make a high there of 80.80, so you missed it by, you know, about 80 satoshis right there. 52, my bad. So yeah, this doesn't look like an area where I definitely want to enter now. If you are going to contain, if this bullish trend is going to continue, again, this is just going to follow Bitcoin, guys. If Bitcoin does significantly reverse from right here, we'll know soon, guys. We'll know soon whether this is going to be an actual complete exhaustion of this uptrend or an area where we at least for sure would like to see some healthy retracement and a pullback to establish these levels as actual support before we continue to bullish push to about 4,400. That's what I'm looking to see. Again, at this point in time, I'm going to bet on the short on Bitcoin. I feel more confident in that trade just based on what I'm seeing right now, obviously being at these key areas of distribution, seeing this bearish candlestick pattern play out pretty much across all time frames, and seeing this blow off top of volume right here at the top. I'm going to be betting against altcoins and Bitcoin right now at this point in time. So, and we'll see if XBT finds that nice healthy support and continues the bullish movement upwards, then we'll likely see the same thing for a lot of these altcoins as well. But I do expect them to get hit harder and have significant and to have more downside actually than BTC, because things do need to kind of cycle out and clear out for them. So people take their profits on XBT once XBT gets a little boring and goes sideways, and then people push that capital into the markets. That's why the markets always kind of trail XBT by a few days. So yeah, not an area where I want to enter now. Wait for a nice healthy pullback, man. All right, hey bro, K7 Jixer, man, I'm sorry, dude. I just kind of got the signal. I got to get bouncing, man. I got to take care of some family stuff today. I'll look at Waves Free tomorrow if you are here, man, for sure, for sure. Just ask Parker. I do honor my promises. Sorry to cut it a little. Again, it's not early. I've been doing this for about 2 hours now, so that is the traditional show. So I was happy I was able to bring this to you here today, guys. Let's end the show as we normally do and pay some bills, guys. First off, if you have been following us, I just want to give a big thank you, man, to everybody that's been dropping by the Discord, liking, following, subscribing to the channel, man. We are here live every single morning at 11 a.m. Central Standard Time, 12 p.m. on the Eastern Seaboard. Fantastic, and really been supportive of what we've been trying to do here, which is educate people on how to trade properly and give our sometimes wild and crazy thoughts on which way the market's going to move, guys. If you do want to support the stream for no cost, man, there's a lot of ways you can do it. Gently nudge that like button. We highly appreciate that. You know, give us a sub on YouTube. If you head on over to twitch.tv/cracking crypto, we are trying to build up the Twitch following, so you can give us a follow there. If you do have Amazon Prime, you can give us a subscription. Costs you nothing, gives us a couple bucks, helps keep the lights on. You can also check out our Patreon if you're interested in going down that route as well. However, if you would like to really just dominate the markets, man, you can head on over to our merch store at crackingcryptocurrency.com. You can pick yourself up a mug or t-shirt, man. Again, I've gone over this at length, but I just want to make sure you guys are aware. This is the cup that I drink my morning coffee out of every morning, right here, the Cracking Cryptocurrency Contrast Hodl mug. It's $15.99. Hey, Mile High Freedom, thank you so much for the sub on YouTube. You know, we get a small penance from the sale of the merch, but most of this just goes right back to Spreadsheet, who does our merch for us. Free delivery until Christmas. Oh, no, wait. Your order will be delivered after Christmas. God damn you, con! But if you do drink your morning coffee out of this particular mug, I have noticed that since I've been drinking my coffee out of this, I have been 85% more successful in my trades. My coffee has tasted 90% better, and I am 102% more attractive to the opposite sex. Yes, those percentages just continue to go up every day, but maybe it's the more coffee I drink out of it. It's probably a cumulative effect, I think, yes. If you would like to join the Cracking Cryptocurrency Premium Trading Group, it is $80 a month currently for the month of December. You'll get access to the private chat room. You get access to the private signals and trade setups chat room. It's not really a chat room. It's the signals and setups channel in the Discord. Get access to all the private channels behind the Discord, the VIP day trading voice chat, the VIP channel as well. You get access to our resource library, which has full webinars, full cryptocurrency courses, full trading courses, PDFs. You get access to a trade journal, our live tracking sheet, and you also get access webinars with the Cracking Cryptocurrency trading team to teach you trade strategy, risk management, and everything you need to be a successful trader. So I also want to personally thank everybody that has been signing up for the trading group recently. We've been crushing it, man. And it's just because we have a lot of traders and analysts on the same team that we're able to capture so much market and so many different styles of trading. So big thanks to all you guys. If you guys are interested in that, all the information is on the website at crackingcryptocurrency.com. The information is also available in our Discord, which is linked right above. You can see that little image right there, guys. If you have any questions for us, comments, concerns, opinions, sarcastic remarks, and or death threats, as always, leave them in the comment section down below, or you can email us at contact@crackingcryptocurrency.com, or you can DM any admin or moderator in the Discord, guys. We look forward to hearing from you. You guys have been fantastic. Make sure you're trading safely, and you guys keep it safe out there.